An FHA loan, it's an acronym for Federal Housing Administration Loan. Now, these loans are phenomenal. There is a little bit of a quirk in it that you have to watch out for, but I want to tell you all about it. Now, an FHA loan is a Federal Housing Administration loan from the federal government, not necessarily from the federal government, it's just backed by the federal government. Now, to get an FHA loan, it's super simple, and there's a couple little criteria we got to go through, but there are also some great reasons why you want to take it. The biggest one is you get to only pay, or you only have to pay 3.5% down as a down payment on a house. An FHA loan is to buy a house. If you put 3.5% down of a $100,000 property, that's only $3,500 to buy a house. Imagine that. It's such a low amount of down payment. Used to be with a conventional loan, and I do have a whole nother video where I actually analyze the difference between a FHA loan and a conventional loan and which one you want to do. So check out the video in the description for that. But the difference between an FHA loan and a conventional loan are totally different. But what used to be is a conventional loan is to 20% down payment. An FHA loan is 3.5%. So out of a $100,000 property, if you have a conventional loan, that's $20,000 out of your pocket. An FHA loan is 3.5% out of your pocket. So it's a phenomenal way to get started. Hey guys, my name's Dustin Heiner with Master Passive Income, and I help people learn how to quit their JOB, that just over broke job, by investing in real estate rental property so they never ever have to work a job again. And don't forget to subscribe and like this video so I can keep giving you some more great content. And I will also show you how to use an FHA loan to buy an investment property. That's a property that makes you money every single month in passive income. I will literally show you how to do this in this video. So hold on for just a second. A couple more things I want to talk to you about. So number one, the low down payment is great. That is fantastic. Also, you also can have a lower credit score. I think like the minimum is like 560 or 580, something around there. But if you have above that, you can get a good FHA mortgage. The reason why the federal government created the FHA loan is to help people with bad credit or low money or both to actually buy a home to live in. As long as you can make the mortgage payments, you're going to be doing just fine. So that is what you're going to be able to have: a low down payment and a good interest rate with a bad credit. And another key criteria that banks look at is your debt to income ratio. Your debt to income ratio, basically how much income do you make and how much debt do you have? Do you have a lot of income and little debt, or is it opposite? A lot of debt and very little income. You have to have a certain debt to income ratio for a conventional loan. But for an FHA loan, it's a little better. They're much more lenient because they know if you have a worse credit score, you might have more debt. So they're much more lenient. So that is another key criteria. And another great thing is there's no income cap. So if you make $1 million, you're going to be just fine getting an FHA loan. If you make $100,000, if you make $20,000, as long as you qualify for the loan, there's no income cap. Also, another great thing, you can buy single family homes. You can buy a duplex. You can buy a triplex. You can buy a fourplex. You can buy many great properties. Now, to actually get an FHA loan, and I'll get to the downfalls in just a second, but to get an FHA loan, it is super simple to get an FHA loan. You literally call up any mortgage broker, literally any mortgage broker, and say, "Hi, I'd like to get an FHA loan for this property," and they're selling it for $150,000 or $200,000, whatever it might be. The mortgage broker say, "Great, let me go ahead and get you set up, fill out this paperwork." They literally do this all the time. FHA loans are everywhere. So make sure you just talk to any mortgage broker, literally any, and they will be able to get this done. Now, there are some downfalls before I get into how you can actually invest with an FHA loan. So before we get into that, what I want to tell you is some bit of downfall. So number one, if you have an FHA loan, you're going to have to pay insurance. Not homeowners insurance that'll protect the house, mortgage insurance. It's private mortgage insurance. And what it is because you're putting 3.5% down, you may be more at risk, or the government sees you possibly more at a risk to default or not be able to pay back your loan. If you don't pay back your loan, the person that lent the money is going to be out the money, and they don't want that. What the FHA loan does is they actually put the PMI, is the private mortgage insurance. That PMI is actually going to be an additional cost on top of your mortgage payment. So if your mortgage payment is $1,200 a month, they'll tack on another, let's say $80, $100, $150, whatever it comes out to be, on top of that as your PMI or your private mortgage insurance. That's a big thing. You have to account for that because it's an added cost. Another thing, that PMI doesn't come off. It doesn't come off, and you only way to get it out or to get rid of that PMI, that extra payment, is to actually do a refinance, to refinance the property out of an FHA loan into a conventional loan. If you do that, refinance it out of that and do it in a conventional loan, you will get rid of that PMI as long as you have 20% of equity in your property. And I know there's a lot of big words. Basically, if you owe $80,000, but it's worth $100,000, that's 20% equity. You have 80% equity. You can get rid of the PMI. And another thing is lower loan limits. You can't get like $1.5 million house with an FHA loan. No, I think the cap is right around $600,000, $700,000 for an FHA loan. So there are lower loan limits. And another caveat that you must know about is that you must live in the property for a minimum of 1 year, 12 months all around. You have to actually live in the property because it's for people to buy as a owner-occupied home, one that they would live in, not an investment property. But there is a catch, and this is what I'm going to show you, is how to actually buy an investment property with an FHA loan. Now, with this FHA loan, what you're going to do, you're going to buy your first house with an FHA loan. Put 3.5% down, get into the house, live in there for a year. In that year, you start the refinance process. You refinance it, get out of that FHA loan. Now it's in a conventional loan. Then you go buy another property with an FHA loan, 3.5% down. So now you have two properties. You move into the next one because remember, you have to be in that second one for a year or 12 months. Then this first one, it's a conventional loan. You don't have to live in there anymore. You rent that house. You rent it out to somebody else, pays you money, you make money, helps you pay this property. Then you refinance the second property. Then you put in a conventional loan. Then you buy a third house. You move into that one. It's house hacking. It's fantastic. Move into the third one. And then you have two rental properties. And you have this house. You refinance that one over and over again. You can absolutely do this over and over again. So that is it. Remember, I have another video. Watch this video right here where I actually compare conventional loans and FHA loans and the difference between the two. You guys are awesome. I'll see you. Don't forget to subscribe and like this video. And I'll see you in the next one.